Good everyone. This is another lesson here in the Forex Manual of IUC Forex Academy. This is lesson 3. In the lesson 1, I talked about finance. In the lesson 2, I gave you a good footing into coming in as a foreign exchange market trader, a Forex trader. So I gave you some rudiment of Forex, and I also touched on ways in which you can see and envisage you're going forward into this market and how you can profit off from that. So in here, like I said, I'm going to be going over some things. I said that we go over price action, but there's something I want you to see, which is very, very important, and that's on compound interest. So I just want to go over to the slide. So let us get right into the course. Okay, so we'll be looking at the power of compound interest and money management. Why this particular lesson is very, very important, and why you need to take you need to pay good attention to it. You see a whole lot of traders, or you hear of a whole lot of traders who has made significant amount of money in a short period of time. They make times 2 of their accounts in a day. Some do it in an hour. Understand? Some do it under 10 minutes. They have made times 2 of their accounts. But the longevity of their account, you don't get to see it after 3 months, after 6 months, after 1 year. If you stretch it, you don't get to see that same account after 5 years. So when persons come into this market, they come in with fear. Am I going to lose all my money? Am I going to blow my accounts? No. That is only being done when you put all your risk in. I've taught you in the previous lesson about stop loss. That's your risk. When you leverage all your risks, when you load all your positions into the market, it is what you offer the market can take away from you if you are wrong. So if I don't want to risk more than 2%, I will not lose more than 2%. It's programmed. If I don't want to lose more than 10%, I will not lose more than 10%, all at my own discretion. So I have that authority to say, I don't want to lose more than this. I want to gain like this if I'm right, if I want to trade, and if I'm wrong, I don't want to lose more than this. All those things are determined specifically by me, and it cannot be manipulated. It cannot be changed by my trading interface. So when you see traders, they come into this market and they can make money. Almost every trader have made money one way or the other, and you really don't need to know anything about this market to make money. Understand? If you tell someone that if this market is buying, you're going to make money. If the market is going up and you're buying, you're going to be making money. If it's coming down and you're selling, you're going to be making money. Someone can just write off on top of his head, follow the market as it's going up and place a trade and be making profit. That's profit. But when you come to taking this thing as a career, you want to see consistency. You want to be able to manage an account. That's where you need to learn. Understand? You can make money without learning anything in this market. You can also, and but there's a certainty that you will lose money if you don't really know what you're doing. Understand? So when traders come into this market and they make money, they think that thing will continue forever without being knowledgeable of the underlying precept that accounts for consistent profitability. That's why inside this course, I've been trying to shift your mind to finance, shift your mind to managing money. Managing money. You will learn Forex here. IOC Forex Academy will teach you everything you need to know, why the market goes up when it goes up, why it comes down when it comes down. But I want to focus your attention. What is it that most persons that trade the Forex market, they lose? Have you sat down to think about that? But those same persons have, in one way or the other, they have testified that they have made profits. But why can't they show it after a long period of time? That's because of the expectation they have, because of the things that they think they can do, and how they place their mindset coming into this market. I've talked about how to tackle poverty itself from your mind. Now I'm talking about compound interest. And I'm going to show you something that, although it's going to be very, very simple, anyone can understand it. But when applied, it is powerful. It is powerful. Yes, you have seen me call the markets right. Most of the time, I say to buy, and most times it goes my direction. But one thing that also attributes for my own level of consistency is that I bank on compound interest. I'm a good money manager. I can manage money very, very well. I can manage an account very, very well, despite having some losses and having wins in my account. I can manage the equity curve of an account. I can manage drawdowns. I can compound an account. I know the stages towards compounding an account. If I meet a certain breaker and I need to reset and pull back up again, I know what to do. I know the stages to build an account. Thus, I want to open one of it to you. This is not all, but I want to open, just show you a bit of it and also show you a bit of money management in here so that you can come into this market really knowledgeable of the long-term expectations of an account. So when you see traders, they trade and they focus on their trade. Most times they focus on what that particular trade will give to them. Thus, you see them moving stop loss down and changing and tweaking a whole lot of things. If they are in a position, they keep on shifting their stop loss, they keep on adding to their position to protect their position, they add to their losses. Understand? So just to make quick money, they are focused on just that particular trade. Their mind at that point is a box. The market has drawn their mind from a long-term approach and the longevity of the account to don't allow this trade go wrong. It's just about that trade. That's where you have your mind fixed. Now, I'm going to be showing you about a long-term something that if you have your mind on that, you can be sure that your money will never blow. You will never lose money in this market. If you obey what I'm telling you here, you will never lose your money. Never, 100%, never lose your money here in this market. You will always compound your account with good money management. All with respect to the fact that you are following what is being taught here. That's the assurance we are giving you. All with the fact that you are following what we are giving to you here. Here in IUC, we normally tell our students, if after 4 months of applying our concept, you are not profitable, we can give you all your money back. That's enough guarantee to show you that we know what we are doing. Okay, so let me just go right to the course, not take much of your time. Okay, so I said here that a part of all you earn is yours to keep and you make it work for you. It's your slave, make it work, and each children make them work for you until your time on earth is over, after which you can then pass it to your descendants. Now, what I'm trying to let you know is that whatever you make, you have to leverage on a part of that to be able to accumulate further more money for you. Thus, I told you in the first slide that the wealthy know that the purpose of money is to use it to make more money. This is just also drawn from that. Whatever you make is to make more money for you. Thus, keeping your money idle does not really do anything for you. Money grows when it flows. Understand? Money grows when it flows. If money does not flow, it will not grow. As long as you keep a seed in your hand, it will not do anything. It needs the right environment for it to be able to function. It needs the right humidity, it needs the right temperature, so it goes into a place that is convenient for that in the soil. It needs water, it needs sunlight, it needs all those things. So thus, whenever you are coming to manage money here in the market, the Forex is just an instrument for you to be able to trade your money. And the underlying factor is that account. So how do you build that? Thus, I'm saying that whatsoever you are doing, you must make sure that it's making you more money. And also, you protect the risk side of that account. I've told you that in life is all about risk. If you want to go forward, you see risk. You have to take calculated risk. Risk itself is not bad. Underneath for risk is opportunities. Understand? Risk is opportunities. I don't want you to see risk as a bad thing. Risk is opportunities. But the wealthy, they take calculated risk before they make a move. You see them, if it's a company, they check out your portfolio, they check out your stock. What have you been doing for the past 5 years? How has your margin been? They check all those things before they be able to key in and put money into what you are doing. It's not just Forex that they put money into. They put money into lots of business. Even in real estate, before you go to buy a property, you want to be able to do a survey, do a back test of what that piece of land can give to you. What are the futuristic plans of that? The development going toward that side. Are you buying low or are you buying high? You understand? So you want to be able to buy low and sell high, something like that. So you want to take a survey. So thus, when you come into the foreign exchange market, when you place your money, you need to make sure that you take part care of that risk part by taking calculated risk. How do you take calculated risk? You have your system of trading in place. You have a trading system. I myself, what makes IOC is the system we trade with. We have a framework in which we give in our classes that we don't go outside of. And that thing is responsible to account for the compounding of our accounts. Thus, I want to show you a bit of that here in this slide. So I said, just like Albert Einstein said, that compound interest is the eighth wonder of the world. He who understands it earns it. He who doesn't pays it. So compound interest has been the greatest determining factor to how I scale up. There's an error there, sorry. How I scale up my trading account. This particular lesson is very short, but when applied, I bet you will be blown away by its effect. Traders who trade with the expectation to make multiples of their account in a couple of days never enjoy longevity of those accounts. Why is that? Because in order for you to make big reward in a very short period of time, you need to engage big risk. I also scale up accounts very, very well. I do some crazy things on accounts, but at points whereby my risk is always tight. Thus, when I want to increase what I want to make on an account. So if on a normal, I normally make, let me just say for an example, I make 20% at the end of every week. If I want to increase what I will make at the end of every week, I will have to break that 20% down. Okay, 20% in a week, what will I make in a day to be able to meet that 20% in a week? That means every day I should be able to make minimum, let me say like 5%, because taking to the whole trading week, if you do 5 times 5, that's 25, is more than my weekly objective. So if I am making 5% in a day to get 20% minimum in a week, and I want to increase my weekly income, what do? I don't focus on, let me risk big. If I am making 5% in a day with a maximum risk of 2%, and I trade once in a day, what I do now is that instead of me to come in once in a day, I try to look to still keep my 2% intact, but I come in different times, enjoy that single day, and increase my daily profit, which will automatically increase my weekly profit. So just understand what I'm saying. If I want to increase my overall output long term, now I'm saying in a week, what I do not increase my risk. Instead, I maintain my risk, but find out more opportunities in the market to come in and trade while still keeping my risk disclosure tight, increasing my daily return, thereby increasing my weekly or my monthly return, as the case may be. Understand? So that's how I do it. I always make sure that risk part of it is always closed. It is better to grow well than to grow fast and you lose it all. That's something I always preach to everyone, because I want you to be able to look at your account for the past 2 years. It has not blown. and it is paying you, it is working for you. A part of all you earn is yours to keep, is to work for you as your slave. You are meant to put it to work. What I said now, that each children, all these things mean that the profits coming into the accounts are the children. So what is coming in is meant to accumulate to what we make more, and they are meant to be accumulating. And the way you ensure that that is consistent is by trading, of course, but the way you should ensure that that thing is consistent and it does not go out is by taking calculated risk according to a system you have built for yourself that will always amount to profit in a risk disclosure that is convenient for you to trade and does not lead to the eradication of that account. So traders who trade with the expectation to make multiples of their account in a couple of days never enjoy longevity of those accounts. For you to enjoy long-lasting and sustainable growth in this industry, you need to have a plan. So let's look at our compounding plan. So I said that, so in here, I'm focusing on how do I get ×2 of my account? How do I make a double? So a double of $100 account is $200. If I double $100, it's $200. That means 100 times 2, $200. So I want to draw your mind to making a double. Let's look at a double. Don't think of, I want to make ×10. I want to take a $100 account to $1,000. Don't think about that. A time will come, you'll be able to do that. I don't want to put your mind on what is realistically expected to do. I don't want to build daydreams in your mind. Oh, the forex market is $6.6 billion every day. Even if you can trade your account and you can make $1 million, I don't want to bring that in your mind. I want you to be able to see something that is realistically expected and you can get there. You will not feel discouraged. You will not feel that you cannot do it because of after 5 years, you have not been able to do it. No. Go and ask traders that have been trading this market for over 10 years. You see that most of them still cannot even show you ordinary $50,000. They cannot show you. And they have been trading this market for so many years. Why is that? This is what I want to show you today now. So I want to draw your attention to making a double that's ×2. So I said that, do you know that 10 doubles of an ordinary $100 account amounts to $102,400? So what am I saying? If you do 10 doubles of $100, a double is $200, just like I said. A double, $200. The second double, $400. The next one, $800. The other one, $1,600. The next one, $3,200. The next one, $6,400. The next one, $12,800. The next one, $25,600. The next one, $51,200. I believe. Then the next one, $102,400. So that's doubling your account 10 times. This is compound interest. I don't make the slide too messy. If not, I would have done that for you. But this is compound interest. So we want to focus on how do I make a double consistently, and how long will it take me to make a double conveniently. Just look at the words I'm using. How? So you need to know how. How do you make a double consistently? I did not say, let me make ×10 randomly. Today I make ×10. Next tomorrow my account is blown. No. I'm saying, I'm giving you a plan. How do you make ×2 consistently? And how can you do, what amount of time it will take you to make a double conveniently? So you need to know what is consistent and you need to know what you can do conveniently. So I said in the next one, do you know that 10 doubles of an ordinary $1,000 account, all this money is not too hard to get. $1,000 is not too hard to get, I believe. So If you do that, if you double a $10,000 account 10 times, you are getting $1,024,000. You can count how many forex traders you know, crypto traders you know, not you watch online, you know physically that have this money. I bet you mostly they are not even up to even 3. You don't even know up to this. Understand? So do you know that 10 doubles of an ordinary $10,000 account accounts to $10 million? So you as a trader following this plan, you must be able to know how to certainly amount to making a double. So how can you make it consistently? So how certain you are to make a double while still keeping your risk exposure between 1 to 3%. That is the main thing. Now, this is the main thing. Just like I said now, if you want to get to a weekly profit, you need to still keep your risk disclosure intact while maintaining that, still increasing your capability of producing daily that will amount to your overall objective or your overall plan or your overall profits. You need to keep that risk disclosure. You need to keep it very, very tight. So I'm saying that while you still maintain 1 to 3% risk exposure, you look for how to certainly amount to making a double conveniently. As a beginner, using this plan, you do not rush this process of making a double in a day, week, or in a month. So one must understand the market. You must know your edge. You must know your edge. So a deep understanding of the market is required to do this. And you must know how your boundaries for operation of getting that. So if I don't risk above 3%, what will I come into the market? How many percent will I risk whenever I come into the market? That's why I said that contents of this plan is found in the advanced course. Certainly, I have an urge to really show you everything, but it really cannot be done in this frame because this is just a short class we are having. You understand? It's not the whole of our course here in IOC. So in as much as I want to show you everything, I really cannot do that because it does not match the time frame and the context we are working with. All these things, they are being dissected into ways that each of the components is outlined in all of our courses going forward. Understand? So I really want to give you this, but you need to know components of that and the workability of how they imply to you as a trader. So I said you need to understand the market. That's why we teach, for you to understand why the market buys when it buys, why it sells when it sells. And you need to know your edge. When are you to come in? What are you to do? Where will you put your stop loss? Where will you put your entry? Which day are you meant to trade? I don't trade every day. There are days specifically I don't trade. So which day are you to trade? What are the markets doing? All these things you need to know. Then you need to frame your trading plan, constituting all components for consistency. That means for this double, you want to make times 2. Then you go into realistically aiming for profit and doing it confidently. That's the times 2 we're talking about. As a beginner, you may make a double, that's times 2 of your account consistently, maybe let's say in the space of 2 months. Then as your skill increases, it will definitely take lesser time to make that same double. So you will go from 2 months, maybe to 6 weeks, then to 1 month, to 3 weeks, and thereabout. So I said I like to keep the maximum expectation here to be 2 weeks so that I will not promote irrational trading behaviors. I myself, I can do less than these 2 weeks, but I'm telling you that I want to keep the maximum there so that you'll be able to go from stage to stage before you get even to this 2 weeks point, and you will know how to do that while still keeping your risk exposure between 1 to 3%. That's the most important thing. So you know what you are doing. You have a good understanding of the market. I told you something. This market will never give you it will not pity you. If you don't understand it, you will pay for it. Understand? If you understand it, you will reap the rewards. Understand? I bet you, even in this free manual we are giving to you, you have not seen anything of this nature, even on the internet. That's because of, by the grace of God, I have spent time to really dissect this market and all its components. Not just if the market will go up and down, how it aligns with managing money, how it aligns with trading an account, taking it from one level to another. Most Forex mentors online, they teach you what they give indicators, robots, how to do this and that one. But people don't focus on money management. They don't focus on psychology. So in here, we are giving you a balanced diet, everything, technicals, you need money management, you need psychology, all those things are in here. And you need to account for all those things before you become consistently profitable as you want. What you are dreaming about to be able to do, to take an account from X amount to Y amount, it's not impossible. But your journey towards there, it has to come in stages, and you need to modify into the trader you want to be. The difference between I and you, it's not that I'm so special, but I'm special, although. So, but the difference between I and you is that I have modified, I have been able to evolve into the kind of trader that this market respects. I have broken myself, I have changed myself to be able to get to this market, to be able to align to the kind of trader this market respects. This market respects some kind of traders. This market will respect a patient trader. It will respect a knowledgeable trader. You know what you're doing. It will respect a trader that has realistic expectations. It will respect a trader that is disciplined. You know your edge. You don't go against it. You know your trading system. It will respect a systematic trader. You know your journey from point A to point B, and you know the components. You know all the places to get to before you get to that point. It is planned. It's what you tend to take a pen and write how you get there. You can write it, not by wishing that God will do it for you or anything. You know the component of that plan. So this market will respect those traders that have those certain abilities and capabilities. So you need to evolve into that kind of trader. And I bet you, although, like I said, I'm giving you everything I think that this context can be able to contain, but all of it cannot be found just in the Forex Manual. The Forex Manual is to give you a footing into you venturing into what the in-depth of all these things it contains, because you need to have a working knowledge of it before you can actually reap your expected returns from this market. So I said that, do you know making a double every 2 months will take you 20 months to make 10 doubles? So I am relating what this is doing with what I put here. This is the compounding plan. So to make 10 doubles, how do you make that consistently and conveniently with a amount of time? So I am bringing the time factor now. So if you are doing this double, if you make one double every 2 months, it will take you 20 months. That's a year and 6 months. So it will take you 20 months. Sorry, a year and 8 months. Sorry about that. So it will take you 20 months to be able to make 10 doubles. So in a year and 8 months time, you have turned $100 account to $102,400 if you are making ×2 consistently every 2 months. And I believe any newbie can do this easily. Let's go further. If you make a double every 1 month, you will take 10 months to do this, to make 10 doubles. So if you are making 2/10 of your account every 1 month, so in 1 month, you are making 2/10 of your account consistently and conveniently without risking more than between 1 to 3%. It will take you less than a year to take, let's go for now, a $1,000 account to $1 million. If you make a double every 2 weeks, which is also not hard to do if you know what you're doing, it will take you 6 months to make 10 doubles. So it will take you 6 months to be able to turn a $10,000 account to $10 million account. And while trading, I myself, I have different accounts. I normally advise our students, you have a long-term account you are building to follow your compounding plan, and you have your short-term account you are using to take care of expenditures. So you want to buy something, you want to take care of your family, you want to buy your things, pay your bills, and all the rest. The short-term account, which is otherly called your expenditure account, take care of that. Then you have your long-term or compounding account, which takes care of your big goals and setting you up for wealth. So you build that minimum. I want to say you should keep it for minimum 6 months without touching it. So you make sure that a part of all you earn, any money you have is being, a part of it is being put into the account, and you trade it up, looking to make a double conveniently at a space that is easy for you to do. Then you increase your ability by learning more about the market, by understanding yourself better, by being able to get more discipline, obeying the rules better, and also look to increase how well you make your daily profits, your weekly profits, compounding that account to give you your long-term expectation of the 2 times or a double, while still keeping your risk exposure between 1 to 3%. So, like I said, that the lesson, I don't think it will be long. I don't think I've spent much more time, but this is it. This is it. It's very short. It's just one slide, but there's a whole lot to pick out from this and to implement. Going forward, we'll be going in depth on how to know when the market will go up, down. So we'll be going in depth from the lesson 4, talking about that. So have a nice day. If you have any question, you can just drop it in the channel where this will be posted, of whichever purposes, on our sites, on any platform that we keep open for you to be able to keep your comments and all. So thank you very much. Have a nice day. I remain your favorite mentor, IOC. I'll see you in the next lesson. Thank you very much.